Welcome to the Lever Trades podcast, where we take a deep dive into both foundation and advanced educational trading concepts. This video is not intended to provide investment advice. All content and opinions shared are for informational and educational purposes only. Trade at your own risk.
Ever dream of ditching the 9 to 5 and becoming a trader? You know, like making millions with a few clicks on your laptop, living that laptop lifestyle.
Oh, right.
We're diving into that thrilling world of trading today, but
Yeah.
hold your horses before you quit your day job.
Hold on.
We're not picking winning stocks or anything like that today. We're talking about something way more crucial: risk management.
Yeah, it's like this. The truly successful traders, the ones who really make it, they're not the ones who just make a killing on one lucky bet.
Right.
It's about staying power.
Yeah.
You know, They figured out how to weather the storms, protect themselves when things get rough. And that's what we're going to unpack today.
Okay, so let's unpack this risk thing.
Okay.
It's not just about being scared of losing money, right?
Right.
Our sources really emphasize that risk has a very specific meaning in the trading world.
You're spot on. Think of it like this.
Mm-hmm.
Imagine two scenarios. In the first, you'd invest $100 and bam, the market takes a downturn, you lose it all. Okay. Now scenario two, you invest that same $100,
Okay.
but this time you're only risking 2% or $2. You see the difference.
Yeah.
It's not just about the possibility of loss, but the size of that potential loss
Right.
relative to your total capital.
Okay.
That's risk.
That makes a ton of sense. So it's like even if you make a wrong call, you haven't blown up your entire trading account. You can still come back from that.
Exactly.
Yeah.
Now, layer on the fact that financial markets are notoriously unpredictable.
Oh, yeah.
It's like trying to predict which way a leaf will blow in a hurricane.
Right.
News, politics, global pandemics, you name it, it all influences the market. And that's why having a structured approach to risk management is just, it's non-negotiable.
So it's less about predicting the unpredictable.
Right.
And more about being prepared for, like, anything. It's giving me major survival kit vibes.
Perfect analogy. And just like a good survival kit has, you got different tools for different situations, right?
Right, yeah.
A robust risk management strategy is going to have multiple layers to it as well.
Our sources really dug into why this is so important, like really hammered it home. And they had 5 key reasons why risk management should be every trader's obsession, right?
Absolutely. And you're right. They really emphasize these points. It's not just about avoiding losses. It's about building a foundation for sustainable success.
And that's where it gets interesting for me because some of these reasons surprise me. I mean, the first one, preserving capital, seems pretty self-explanatory. Don't bet the farm, right?
It seems obvious, but trust me, it's the mistake I've seen way too many times.
Really?
It's like they're so focused on the potential wins, right?
Right.
They completely forget about protecting their downside. It's like you can't win the game if you're out of the game, right?
It's like that classic saying, it's not about how much money you make, it's about how much you keep. You can, like, hit a home run,
Yeah.
but if you strike out every other time at bat,
That's right.
you're not going to win the game.
Exactly. You've got to stay in the game long enough to capitalize on the good opportunities. And that brings us to the second point. Emotional control. Trading psychology, man, it's huge.
Oh, yeah.
It's easy to get swept up in the excitement, the fear, the greed.
Right.
It's a roller coaster. And without a plan, you're just holding on for dear life.
I can see that. FOMO is a real thing, especially when everyone's talking about the next big thing. You mentioned trading psychology. How does that tie into risk management?
Well, it's all about, taking the emotion out of your trades.
Yeah.
See, when you've got a solid risk management plan, it's like having this set of rules that you stick to no matter what.
Right.
That way, when the market throws a tantrum, you don't panic and make a rash decision. You know what I mean?
Right.
You're thinking clearly, strategically.
So it's like, okay, market, you do you. I've got my plan. I like it. It makes sense, especially with something, as potentially volatile as trading. Speaking of which, our sources highlighted this idea of consistency and longevity as another benefit of risk management. That kind of threw me off a bit at first. How does playing it safe equal long-term success?
It's like the tortoise and the hare, right?
Right.
Slow and steady wins the race.
Right.
It's not about chasing those overnight riches.
Right.
It's about building something sustainable. Think of it like a professional athlete.
Okay.
They're not winning championships by pushing themselves to the limit every single day, are they?
Right.
They have a training regimen, a diet, a whole system designed for peak performance over the long haul.
So you're saying like risk management is like an athlete's training plan, but for our money. I'm starting to see the connection here.
Exactly. And that ties directly into the fourth benefit, which often gets overlooked.
Oh,
Maximizing returns.
okay.
Now, this might sound counterintuitive,
Okay.
but managing your risk properly can actually lead to higher profits over time.
Okay. Now you've got to break that down for me. How does playing it safe lead to bigger wins? I'm all about maximizing returns, but I need to understand the strategy here.
Okay, think of it like this. Let's say you've got two traders, okay?
Okay.
Both starting with the same amount of capital.
Okay.
The first trader, let's call him Reckless Ron, he's all about chasing those huge wins. He puts a large chunk of his money into every trade, ignoring any signs of risk. Sometimes he gets lucky, but more often than not, he ends up taking big losses that wipe out his previous gains.
So he's basically riding the roller coaster with his eyes closed.
Exactly. Now let's look at strategic Sarah. Okay. She's all about protecting her capital.
Okay.
She only risks a small percentage on each trade,
Right.
and she uses tools to manage her downside.
Mm-hmm.
She may not hit those massive wins as often as Reckless Ron, but she's also not blowing up her account every other week.
Right.
She's consistently growing her capital, slowly but surely.
It's starting to click for me. Strategic Sarah is in it for the long game. She's not trying to like get rich quick. She's building a solid foundation. But what about those times when the market takes a nosedive? That's where it's easy to get scared and make emotional decisions.
You're right. Those market downturns, they're inevitable. And that's precisely where the fifth benefit of risk management comes into play.
Yeah, right.
Avoiding catastrophic losses.
Right.
Remember, Reckless Ron,
Yeah.
all it takes is one really bad trade, one unforeseen market event, and boom, his entire account could be wiped out.
Gone. Just like that.
Just like that.
Yeah.
But strategic Sarah, she's prepared. She's got her risk management plan in place, so even if the market takes a hit, she's limiting her losses.
Right.
She's not panicking. She's sticking to her strategy.
Okay, I'm sold. Risk management, crucial. But how do we actually do it? It's one thing to like talk about the why, but I'm ready to get into the nitty-gritty of, how to build a solid risk management strategy. What tools are we talking about here?
Well, our sources really delved into the practical side of things, which is awesome because, that's where the rubber meets the road.
Right.
And they broke it down into a few key components. The first one we need to talk about is position sizing.
Position size. Okay, what's that all about? Position sizing. Okay, what's that all about?
This is where you decide how much of your capital, like how much you're actually willing to put on the line for a specific trade, right?
Oh, yeah.
So let's say you've got $10,000 in your trading account. Putting all of that into a single trade,
Yeah.
that's like putting all your eggs in one very fragile basket.
Ouch. Yeah, that's a recipe for disaster. Even if you, I don't know, feel really good about a particular trade, things can change so quickly in the market, right?
Exactly. Position sizing is about managing that risk. So instead of going all in, you might decide, okay, I'm only going to risk 1% of my capital
Okay.
on any single trade.
So in this case, with a $10,000 account, that would be a $100 risk.
Precisely. Now, how much you actually invest, like the number of shares or contracts or whatever, that would depend on where you set your stop loss, which we'll get to in a bit.
Okay.
But the key takeaway here is, position sizing. It helps you stay in the game, even if you hit a few bumps along the way.
So it's about controlling the potential damage, making sure one bad trade doesn't wipe you out. What other tools should we be adding to our risk management toolkit? Our sources mentioned diversification, which, seems pretty straightforward.
Yeah, diversification is crucial, but there's more to it than just, that old saying, don't put all your eggs in one basket.
Right.
It's about understanding the relationships between different assets, right? For instance, if you're into crypto and you hold Bitcoin, consider adding other cryptocurrencies with different use cases or technologies.
Right.
That way, if one takes a hit, the others might not be as affected.
So if Bitcoin is having a bad day because of, I don't know, some regulatory news or something. Right.
Your Ethereum holdings might hold steady because they're less affected by that specific news. It's like having a safety net within your portfolio.
Exactly. And diversification isn't just about different assets. It's also about different strategies.
Okay.
Maybe you have some long-term investments, right?
Right.
And then some short-term trades.
Okay.
This way, you're not entirely reliant on one specific market behavior.
Okay, that makes sense. So we've got position sizing, diversification. What else is essential for managing risk?
Let's talk about stop loss orders. Think of this as your automated safety net.
Okay.
You're basically setting a price point where, if the trade moves against you and it hits that point, boom, your position is automatically sold.
So it takes the emotion out of it. You're not
Yeah.
scrambling to sell when you see the market like tanking because you've already set your limit.
You got it. And there are different, types of stop loss orders.
Oh,
You've got your basic stop loss, which is just a fixed price.
yeah. Then there are what they call trailing stops, which adjust as the trade moves in your favor. So it's kind of locking in profits along the way.
Trailing stops. Okay. Those sound pretty smart. It's like letting your profits run, but having a plan in place to protect those gains if the market turns around.
Exactly. And then there's the risk-reward ratio. This is where you assess how much you're willing to risk for a potential reward. For example, a 2.1 risk-reward ratio means you're aiming for a profit that's twice the amount you're risking.
So if I'm risking $100, I'm aiming for a $200 profit.
Precisely. This helps you make more, I guess, calculated decisions about which trades to take and how to manage your position.
This is all starting to come together. But our sources also highlighted something interesting. They said, risk management, it isn't just about protecting your money. It can actually make you a better trader overall. That's a pretty bold claim. How so?
It's true. When you prioritize risk management, you naturally become more disciplined, more analytical, and less driven by emotion.
Right.
You start to see patterns. You understand, market dynamics better, and you develop a
Sure.
system that works for you.
So it's like building a strong mental game, which, as our sources mentioned earlier, is like so crucial in this often turbulent world of trading. It's about having the confidence to stick to your plan even when things get bumpy.
Absolutely. Remember, trading, it's a marathon, not a sprint, right?
Right.
And just like a marathon runner, you need the right strategy, the right tools, and the right mindset to cross that finish line successfully.
This deep dive has been eye-opening. It's not just about chasing those big wins. It's about protecting your downside, staying disciplined, and developing a sustainable approach to trading. So as you continue your trading journey, remember this. Risk management, it isn't just about protecting your money. It's about empowering yourself to become a smarter, more strategic, and ultimately more successful trader.